planning to study abroad, securing funding, and figuring out how to go ahead and pay for your education are all important considerations. Hello everyone, this is Pratibha from GyanDhan. In today's video, I will be discussing education loan versus self-funding to study abroad. Which is better and why? Most parents consider self-financing as a realistic alternative to funding their child's education abroad by liquidating assets or arranging for funds from family, friends or relatives. But such financial aid is not available to all families. So what is self-financing for international study? When aspirants feel that taking an education loan is adding to the financial burden, they prefer self-financing as a viable option to prevent future debt. In order to avoid the excess baggage of loans, EMIs, they'll prefer to pay for everything in one go. What exactly qualifies as self-funding? One may prefer self-funding under the following circumstances. Number 1, paying for your own education. Number 2, requesting financial help from your family, friends or relatives. And number 3, secure funding from a third party. This excludes government and education loan lenders. Now the next aspect is how do you budget for college while self-funding your education? The first one is a financial plan. Students should budget themselves and be prepared for any financial difficulties if they arise during the course of their studies. The next one is scholarships and grants, which assists students to pay for their abroad studies and also enhance their higher education opportunities. And the last option is part-time work, which teaches students to advance professionally and financially. This improves their talents and teaches them how to manage their living expenditures while overseas. Students nowadays are career-oriented and want quality education to help them achieve their goals. Traditional resources such as borrowing money from friends and relatives have become redundant, which turns them into the direction of taking an education loan. Now, what are the types of education loan? So the first one is a secured loan and also known as a collateral loan, which is offered on the basis of a collateral security. So when a borrower pledges a collateral to get a loan, the lender is guaranteed some partial recompense against any outstanding loan debt. This is in case if payments are not made on time, they can seize the collateral and sell the property. The finest collateral loan providers in India are government and commercial banks. Next is unsecured or non-collateral loan. They do not need the pledging of any collateral. They are available to students who do not have sufficient assets to put up as collateral. However, when opting for unsecured loans, factors such as parents' income, university ranking and fees are considered. So the question is, which is better, self-funding or student loans? Multiple factors help a student decide this, like financial burden, monetary advantages, proof of funds, arrangement of large funds, coverage of multiple expenses, the CIBIL score, benefits under the Section 80E, currency rate fluctuations, etc. In most cases, it is recommended that students opt for an education loan rather than self-funding, as education loans come with additional benefits. Students are finding it difficult to secure funding to continue their studies due to the rising prices. This is an excellent opportunity to take out an education loan, particularly during the pandemic, where the country's economy is severely harmed and students are finding it difficult to pay for their education. The trend indicates that the advantages of student loans are far-reaching and their preference over self-funding is considered in most cases. So that's it for this video. If you have any queries with regards to your education loan versus self-funding to study abroad, you can get in touch with a counselor at GyanDhan to assist you free of charge. If you have any questions, please post them in the comment section. Thanks a lot.